Hey there, everyone. Welcome back to our channel. If you're new here, don't forget to hit that subscribe button and ring the bell so you never miss an update. Today, we're diving into a hot topic that's been on many people's minds lately. Should I invest in startups? Now, investing is a big decision, and with the rise of technology and innovation, startups can be enticing opportunities. But are they right for you? Let's break this down together. So, to kick things off, let me ask you a question. What do you think is the most critical factor when it comes to investing in a startup? While there's no single answer, several key factors can help you make a more informed decision. First, let's talk about the potential rewards of investing in startups. Startups can offer incredible returns on investment. For instance, take a look at companies like Airbnb or Uber. Both started as small ideas and became multi-billion-dollar companies. In fact, according to a study by the Kaufman Foundation, startups created 1.1 million net new jobs in the US in 2019, showcasing the impact they can have on the economy and your investment portfolio. However, it's essential to remember that with high rewards come high risks. The reality is that many startups fail. Statistically, about 90% of startups do not succeed. Even if they do, it might take years for your investment to pay off. So, before you jump in, it's crucial to understand the risks involved. Now, let's dive a bit deeper into what you should look for in a startup. One of the first things to consider is the team behind the startup. A solid, experienced team can make a world of difference. Look for founders with a proven track record in their industry. For instance, if a startup is led by someone who previously built a successful company, they might have the know-how to navigate the challenges that come their way. You should also evaluate the business model. Does the startup have a clear plan for generating revenue? A unique selling proposition? For example, consider Dollar Shave Club, which disrupted the shaving industry with a subscription model. They identified a pain point in the market, expensive razors, and offered a simple solution that resonated with consumers. Their innovative approach led to a successful acquisition by Unilever for $1 billion in 2016. Next, let's talk about market potential. Is the startup addressing a growing market? For instance, the renewable energy sector is booming, with a projected growth rate of 12.5% CAGR between 2020 and 2027. Investing in startups that are part of expanding industries can increase your chances of seeing a return on your investment. But remember, not all startups are created equal. Some may seem promising but lack a significant market need. Conduct thorough research and consider asking yourself, will people actually pay for this product or service? Another critical factor to consider is your own financial situation. Investing in startups can be risky, and it's essential to only invest what you can afford to lose. Experts often recommend diversifying your investment portfolio to mitigate risks. Instead of putting all your eggs in one basket, consider splitting your investment across multiple startups or industries. Also, take a look at the investment vehicle you're considering. There are various ways to invest in startups, including equity crowdfunding platforms, angel investing, or venture capital funds. Each of these comes with its own set of pros and cons. For instance, equity crowdfunding allows you to invest small amounts in multiple startups, lowering your risk profile, while angel investing often requires more significant capital upfront and involves a more hands-on approach. And let's not forget about the importance of patience. Startups typically take time to grow, and it might take years before you see a return on your investment. A long-term mindset is crucial if you're considering investing in this space. Now, let's look at some numbers. According to a report by the Angel Capital Association, angel investors in the US achieved an average annual return of 22% over the past 25 years. This statistic highlights the potential of startup investing when approached with the right strategy. But there's also a flip side. A report by Harvard Business School states that while the average return for venture capital funds is about 2.5 to 3 times the initial investment over a 10-year period, the reality is that many individual investments result in total losses. So, the key takeaway here is that while the upside can be significant, the potential for loss is also very real. So, should you invest in startups? The answer isn't a simple yes or no. It depends on your financial situation, risk tolerance, and investment goals. Conduct your due diligence, evaluate the team and market potential, and diversify your investments to minimize risk. If you're ready to take the plunge, remember to keep a long-term perspective. Thanks for joining me today. If you found this video helpful, please give it a thumbs up and share it with friends who might be considering startup investments. And as always, leave your comments below. What do you think about investing in startups? I'd love to hear your thoughts. Until next time, happy investing!